Thank you, Angel, and welcome aboard, everyone. It is another Magic March Monday. There are one, two, three of them left, I think, in this autumn here in Australia. Hope you're having a wonderful or have had a wonderful weekend. I'm still having a weekend here because it is holiday time here in Tasmania, Australia. I've got no idea why, but we seem to have a lot of these things. And why not? Actually, if I was employing people, then I'd probably have a little bit of a problem with that. But that's another story, of course. I hope you're ready for action, and I am certainly that. Looking forward to a week of nice trading. I think this is one of Ash's favourite weeks, the second week in the month, and we'll be going to him, of course, very, very shortly when he's got all the late mail for us, and he'll update us on that as soon as he comes in the room. I'm going now to the pound breakout trade, which has been a little bit unreliable of late. Not for that reason, but because I'm now much more comfortable that you guys have got an idea of what the optimized version is like. I'm now going to revert to my system of trading this breakout, and we'll track it from there. Obviously, have we got a problem? No, everything's okay. That, of course, means that we're trading the last three candles. Previously, we've been trading the last five candles prior to London Open on the hourly chart. And today we're going to go back to hi, Paul P. Good to have you on board, mate. We're going back to my system, as I said, which will be the last three bars. This one, and this one. Genuine range there today with the high here above that one, low above that one. So we'll be going short under there. We'll be going long above there. My preference today, if I was, and I am thinking very seriously about trading the pound in its own rights, and I'll go through that a little bit later as well. But let's set up the trades. I think we can safely put the long order in place at the moment. The high of that bar is 1.38389, so we will go in at 1.3839. So we can put that in the label. 1.3839 will be my entry. The stop loss will be below that candle, and the level there is 1.38095. We'll round that down to 1.3809. So a 30 pip stop loss there. And now we can work out our TPs 1 and 2 from that. Because we've got a 30 pip stop loss, our first take profit will be at 15. So half of the risk will be our first take profit. Hi, Lewis. How you doing, mate? In this case, that is going to be 15 above 1.3839. So that'll be 1.3854. That will be our TP1. At which time we'll remove half of our stake and move our stop loss exactly 15 pips from entry, giving us a free trade situation. Our TP2 will be double the risk, which will be 60 pips. So we can go 1.3899 or 99, 0.3899. I've got a problem with nines. The enunciation of them, I don't know why. Just one of those things. And the low of the range currently is this bar here. We'll just put that in. If it needs changing, we'll change it. That's fine. But the low of that bar is, in fact, I'll go away, is in fact 1.3799. There they go again. So the entry level would be 1.3799. Sorry, it's 1.37994. So we would go in at 1.3799. All the nines. It's 9 day. Don't know why. Just the way it is. And the stop loss will be above that candle, which we can now put in at 1.38196 becomes 1.3820. 1.3820. is our stop loss. Now TP1 on the short will be, what's that, 21 pips. So we'll go 10 pips of TP1, which will bring us in at 1.3789. And TP2 will be double the risk, will be 42 pips, which will bring us in at 1.3757. No, 9. What a shame. All right, so there you have the parameters for today's breakout trade. I'll put the long in at the moment. Again, this is still in test mode, guys, and will be for another couple of months. So you need very much to be putting micro lots on this, if anything. 1.3839 is the entry, and the stop loss. Whoops. That didn't quite work, did it? Holy dooly. Best I hope. What happened there? Oh, stone the crows. That didn't go in. Let me try again. 1.3839. And the stop loss is 1.3809. There we go. Good to go. So that's that bar traded. Enter above, stop loss below. Okay. The short will be entering underneath that bar, and the stop loss will be above that bar. So those levels are to sell stop at 1.3799. And the stop loss is 1.3820. There we go. Now I'll put in the TP lines just so we know where we're headed. 3854 is the first, which is just about there. And the TP2 for the long is 1.3899, which is about just above DR1. About there somewhere. Okie doke. The TP1 for the short is 1.3789, which is pretty much there. And TP2 for the short will be 1.3757. Which is, come on, play game. Right about there. Okay, looks like it may want to take us into the long. And we'll get ready for that. If we can zoom along to TP1, that would be very nice, no matter which way we go. I don't know that we're in yet, but we are now. So we need to get to TP1. First thing we need to do is cancel the sell. That's the buy, not the sell. Delete sell. Okay. That one's gone. So we're looking for this 1.3854 level. And we would then move our stops, take profit, half of our risk off the table, half our stake off the table, in other words, bank half, and then move our stop loss. Was it 15 pips for entry? Yes. All right, so let's keep our eye on that for the moment. As I said before, if I was looking to trade this today, I would certainly be looking to trade this long. Now, the reason for that is pretty much, well, actually, it's not really evident on the daily chart. We are at a support level, but it's only minor support. It's not hard support. The hard support level comes down here, I suppose, or harder support. I wouldn't call that hard support either. But I do like the look of it on the smaller time frames. The weekly chart's kind of given us that level, which may well be, just like I said before, the second of that yellow line, which is our TP2 on the short, is probably more the bounce point than is current here on pound US dollar. I wouldn't want to be trading it in a big move either, because the dollar has been strong. Yes, it is coming off a little bit, but the dollar has been strong, as has the pound, and this is a decent retracement. But it's also phase one, phase two. We may be in for a third phase before it does go long again. If it does go long again, it might be in the doldrums. We don't know that yet. But for the short term, as I said before, the smaller time frames are telling me that there's probably a weekly pivot test or even a monthly pivot test on maybe even today. It is Monday, and I don't expect a whole lot of movement on a Monday as a rule, but it does happen that the traders come in and take it a fair distance. We shall see. It's not the one that is on my mind, however. I've got four on my mind, and one of them is, well, actually two of them have got to do with the pound. I'll briefly go through those before Ash comes in. Pound Aussie is the first of them. And I wanted, too late now, of course, I wanted to get long this. And look, the reason is not so much a pound by itself story. It's more it's more an Aussie combination with the pound. I think the Aussie is going to come off a little bit. It already has started that. But this chart here, which is the daily chart, is indicating to me, and you guys know that we're in pound Kiwi at the moment. I think this is very, very similar, but not the same, because pound Kiwi has already come back into that ascending channel. Pound Aussie has not, but what it has done, it's come off the bottom of this range, this rectangle. So reject to the top, reject. I expect it to go towards the top, if not to the top. So for that reason, I'm a little bit bullish on pound Aussie. If you're even thinking that way, there are worse trades to take than put your entry above this bar here and your stop loss below that. I haven't done that, but this one here is very, very similar. Of course, the market gapped down this morning. It's a matter of where do you put your stop loss, really, isn't it, at the end of the day? You've got a clear double bottom or triple bottom, call it what you want, on the daily time frame. You've got a higher high, you've got a higher low, you've got another higher high, you've got another higher low. I'd be expecting that to continue on with that trend, if only short term and to the top of this range. But there may well be more of that upside in that one as well. The rest, I'm kind of with that euro pound that we were looking at last week. Nothing has happened. Well, something has happened there. It's drifted to the downside. And again, the reasoning behind this is the euro pound to become stronger, in my humble opinion. But I think the timing's not right here. We've clearly come off the top of this range, ascending channel, off the top, lower high. That's the place you want to get in. And we haven't gone to the bottom yet. So I'm thinking we need now to wait until that happens. If it happens, it may not happen. Big bar there on 2 weeks ago. That suggests that there may be some upside coming. But if that low's taken out, then that's kind of eliminated. So I'm expecting price to go down to here. Maybe a little rally first, but then down to here, and then I'll look for the long. So the long's off the table at the moment for euro pound, but I'm not dismissing that. It's just a matter of wait. Can we trade it short in the meantime? I think we probably can. That's the weekly chart that we're looking at. Like to see that off resistance. Not the time now to go into that, in my humble opinion. So we'll keep our eye on it. It may be a case of going short to get long this in the longer term. So they're really the two, including the pound. The others are pretty much Eurocentric, and I'm kind of a bull Eurocentric, but there's probably a couple of caveats around that as well. I've had a good look at the Euro index, and the Euro index is suggesting to me that we've had a phase 1 reversal, we've had consolidation, we've had a phase 2 reversal, we've had consolidation, and we're still in that consolidation. You can see how long that consolidation period took for this to move a second time. And I'm probably thinking that we're going to bounce off this trend line and go back to the bottom here. So my bullishness is very, very similar to what I just said on Euro Pound, is pretty much on hold at the moment. If we were to break out of there and maybe retest it, then I think that phase 3 may well come into play. And we're probably looking at, the 95 handle on the Euro index. So I think that makes sense to me, but it doesn't make sense to me to go long at this moment. What I need to see is a break and retest of that trend line and the top of the range, or let's try and trade it down to the bottom of the range and get a better price down here to trade it long. That's the third of my watch list. The fourth is Euro Kiwi, and it goes directly to what I've just described to you on that Euro index. But there's a very interesting chart here that suggests to me that there is an inverted head and shoulders sitting here. We've broken what really is a confused neckline for mine, but let's call that the neckline. We've broken it, we've come back and retested it, but there's an issue. We've now also gone below it, and we're retesting it from below. And there's also the very strong hint here that we've had a false break of the monthly pivot and the trend line. So I'm completely confused here. I'm not sure which direction we're going next. So I'm probably on the sidelines there as well, and maybe expecting going back to that Euro index chart that we trade this short, maybe even back down to here. Maybe that's where the right shoulder belongs. If we can maybe take advantage of that, there may be an opportunity there then to get long. So it may be, of course, a case of go short to get long on 2 or 3 of these. And I'm happy to do that. It doesn't phase me at all. That word is smaller or shorter. Time frames should accommodate that with ease. So let's jump into the week with that in mind. And if we set up, then we trade. Simple as that. The pound has taken us in and not hit TP1 at this point in time. And of course, the danger here is that the daily pivot keeps us well and truly contained, and we fall back into the direction of the short side and that little base that has been formed. We'll see. There's also a box range forming there as well, but I'd expect it to go to the top before it goes to the bottom. So see how we go. Ash, how you doing, bud?
I'm all right, mate. Yeah, pretty good. Just doing a little bit of something here. That should be all right. There we go.
Did Lily get off to school, mate?
Not yet. Not yet. She hasn't left the door yet, mate, but she's on her way. Yeah, won't be too long, hopefully.
I won't speak too loudly then.
Well, no. Well, do you know? I don't know how she's going to be. That's the key, isn't it? It's really difficult to know. You know, how do they react in a situation, because it's kind of all new again for them. So I hope she's going to be all right. But she sounds okay. And I did say to her, she said to me yesterday and this morning, I'm really nervous. And I said, well, it's actually the same as before. You know, it's this is just a normal day. It's just that you're kind of getting your old normal back again. So you'll be absolutely fine. She's quite excited.
Awesome. She'll see a few mates. She'll be away, mate.
Oh, I reckon you're right. Yeah, I reckon you're right. So let's have a look, mate. There's quite a few things I'm interested in, and the FTSE's interesting me straight away this morning, and it's interesting me because we're having a bit of downside. But I've just looked. Brios, is that Brios? Brios, how you doing, buddy? Outdated. Oh, what's that? Sorry, let me just have a look what that is. Hi, Jeff.
Okay.
I may be a bit outdated here. Just wanted to check out why the US Open changed. Oh, Okay, but why we changed the US show? We actually changed to the US show from the UK show, and we've changed back again because there seems to be more interest in this particular time. You know, more people seem to be interested in this time, and it works for Jeff because of the lateness of Australia. When we had the US show, he was going to bed at 1 o'clock in the morning. It works for me because we are trading the UK Open, and it's much more my kind of specialist area. So there wasn't really any negative. Most of the people that were coming to the US seem to want the UK show more. Jeff could get to bed early, and I can trade the times that I'm actually in front of the charts for my particular market. So that's why we switched. The OCO trade we've been. Oh yeah, of course. Yeah, you wouldn't have seen the OCO trade in the US show.
No.
We're doing the S&P, but it did actually start as a pound breakout trade. So I'll tell you what. Unless you've got a lot to talk about, Jeff, what we'll do is we'll have a quick run round what I'm looking at, and then Jeff can go through the parameters of the pound trade. So you can.
No problem.
You can,
and the other benefit of us coming back to this time frame is that it allows people who actually do trade the US Open to be on air at that time, which is now the case. So it's win-win.
Yes. So there are other shows, aren't there? Yeah. And also, you know, if anybody wants to come on mic, the offer's always there. If you want to come on mic and camera, then you are welcome to stick your hand up. No problem, buddy. No problem at all. Good to have you back in. Good to have you back on board. Yeah, if anyone wants to come into to have a chat live, then please do. Just stick your hand up and we'll bring you in. Okay, so let's have a look what we're looking at this week. This is the first thing, and I'm finding this a little bit surprising in truth, because I don't think the UK or the FTSE 100 should have a big move to the downside. And I thought we'd be pretty steady, if anything, because looking around the grounds with I'm going to leave this indicator up just because I'm going to bring it back in a moment. But looking around the grounds in the for the barometers, banks are doing very, very well this morning. Well, they're relatively they're 1.5%, which is a really good bump for a bank for the banking stocks in the morning. So financials are doing pretty well, and energy stocks, of course, are doing very, very well. We see that oil price continuing to ease higher. WTI continues to ease higher. Okay, it's coming off a little bit right now, but it has continued to ease higher. A little gap here. It did seem that the OPEC meeting was pretty beneficial for WTI. So not really looking for any major downside with oil. And if it does come down, then I will be a buyer. Probably the daily pivot, but we could probably potentially look at different areas with a fib as well. Let's just bring this in with a clean chart. Yeah, it looks like at this stage it's attempting to come off these highs, and it's no major surprise. Look where we are. This is a weekly chart, so there is some resistance up here, and so far it's burst through it. So it wants to probably come back and test that resistance before either going higher or maybe tucking back inside it. So that's going to be maybe a news development thing. This is the monthly, which is suggesting that now we're through this area, that the next area should be seen, which is around about the $75 mark on WTI. So looking for those prices on oil. Let me just draw this trend line in as well. Yeah, that looks like there's some confluence sitting around about there. So I would suspect we probably would come back a little bit first, but we've got to stay bullish on oil because the fundamentals really suggest further upside. I think those inventories were maybe a little bit negative, but aside from that, you've got to say that the picture is looking better as countries open back up again. Energy is going to be at the forefront.
I booked my first flights since COVID.
Oh, there you go.
Yeah,
there you go.
So I'm confident then everybody would be, because how conservative I am.
Yeah, I think that's the case, isn't it, mate? And I'd like to get back into this, and I would probably, I don't know, we'd have to do a bit of work on this. This is a pretty strong level here. It gets a bit scruffy here, but it looks fairly tight there, around about the 61.30. So if it does come back at all, then I'm not sure if it would go much lower than 61.30. And it would probably depend on, there's nothing there on the fib there, but if it came up to that level, this starts to become supported. first 23% retracement, and considering the strong move in oil and considering potentially the demand coming back in, I wouldn't really be looking for much more than a 23% retracement. So creeping up to 75, then coming back would be the buying opportunity. I don't really want to play it at this particular point, and maybe we'll come to that in a little while with the indicator later. Yeah, so the FTSE, I'm finding a little bit surprising that we're getting any kind of move to the downside. I think that we probably are in buying opportunity phase with the FTSE, and when it comes down to the clean charts, possibly coming down here, this would probably hold up. 65.50, 55.60 should hold up, and we'll do a fib on that as well and see if that's complementary at that area. Yeah, there's pretty good fib there, 50% retracement. So that gives us down to 65.75 on the futures. So it's going to be near enough that on the cash. I would have thought. What is it? 10 pip difference. So it might be 85, 65, 85 on your chart, something like that, 65.90. So coming down into that area, I think is of interest. Gold has got to be brought back into play again. It's I am just building positions in gold. I'm comfortable with it, and I don't mind if it comes down a little bit more. I'll just continue to buy it up, but I am building positions in gold. We may well have started our first carve out of a low here. Now let's have a look at the trends to the downside and see the signals here. Let's bring a pen in. So what I'm looking for, when we look at gold in the big picture, there's been a huge move down. We know that there's a huge move down. Now there is a fib here. If we draw right from the bottom, bring that in here. There's a fib here. If we draw right from the bottom, we're stuck right on top of the 38.2% retracement. So we're on top of a fib. We're also on top of this trend line, which is just a little bit. It's a little bit steep because you can't really bring these bottom ones in, but if you were to bring them, well, they don't really run in, unfortunately. But there are touches there, so there's a trend line there that we could draw, and let's just double check that trend line. Yeah, it looks pretty good when you look at it that way. Actually, looks like more of a channel as well. So it looks like we're at the bottom end of a channel, and then when we start to look at the weekly chart, we can see that there is a decent area of support and resistance here as well. So there's quite a lot in this area. The only thing, I may be a few pips early, it might be that it comes down to 16.65 rather than this particular area. But I'm taking a punt on this now. I've been trying to buy this up all the way down. And I've gone in again here. And if it breaks the downside, then I'll probably wait for this area down here. Or maybe this high first, and then this area here, and I'll buy in again because I like it. Now, if we look at the trend to the downside on the dailies, and see what it's looked like from this particular point here, it dipped. Now, when it went up, it didn't give us a higher low. Dipped again, didn't give us a higher low. Dipped again. It's a lower high, dipped again here. So we're looking for a higher low to be more confident in this. And it needs to break through the 1750, 1760 and hold just to get a hint. Now that will lead us into this resistance area here. So it won't be ideal, and there's a chance it could be a dead cat bounce that we stay within a trend line here and we stay within a resistance area here that you can see. Why is the fib not taken from next two lows? Let me just see what you mean by that. Do you mean here and here? Is that what you mean, Lewis? Why is it not taken from here and here as well? I just want to see the dates down here. 15. The second one. Okay, this one here. Yeah, for sure. Yeah, that would be a relevant fib as well, because that's really where the trend started, isn't it? And actually, that does suggest a little bit lower for the trend. So yeah, I'd agree with you on that one, Lewis. And that would probably give us, let's just take the first one away for now. That would make this area really attractive. The 1500s really attractive. So that another area to buy in. And what we might get, you know, we genuinely might get yeah, 1500 looks good, doesn't it? You know, it's that looks like the out and out final kind of defense area. That's the last area that will probably be defended. So what we could get is a bit of a bounce here. It might be a dead cat bounce, you know, which is basically false, and then we break down. And then we actually do look to pick it up here instead for a decent move to the upside. And as I say, I'm buying this all the way down. You know, I'm quite happy to purchase gold as it drops because I think inflation's coming. You know, that may not have too many people arguing against that now. The deflation story. The problem for gold is that bond yield, and I wonder. In actual fact, let's bring that in, if that's all right with you, Jeff. I know this might be taking a little while longer, unless you've got something.
Of course, no.
Okay, so
actually, that raises the question.
Yeah,
I don't know. Did you manage to watch that debate?
Which debate was that, mate?
Who was it?
Jerome Powell?
No. I posted it like a week or maybe more ago.
You did?
Yeah. Jim Rickards and
okay.
What was his name? Harry Dent. Yeah, Jim Rickards and Harry Dent. Interesting, very interesting.
Yes, we were talking about that, weren't we? Yeah.
Just Google it if you want to watch it. I'm sure it'd be still there. What
were they talking about?
Well, they were talking about exactly what you're talking about now, which is why it triggered my memory. You know, are we in or are going into a period of deflation or inflation? Is gold going to 1,000 or 10,000? That was what the debate was pretty much all about. So
right,
each of them had an opinion opposing the other,
right,
and we're making a case for the gold at 1,000 and gold at 10,000. Well, actually 10,000 plus.
Yeah. I think 10,000 plus. Wow. Yeah. Okay. Yeah. So 5 times higher. I mean, I think there could be a case for that, and maybe I'll have to watch that debate, mate, because I'll be interested in that particular in that particular stance. I mean, I would agree with it. As I say, this is the big problem, and you can find this on Yahoo Finance. So if you just put in the Treasury yield 10-year. Have a look at it on Yahoo Finance. But look what's happened here. So this is since 2020. This is our chart for 2020 now. Let's have a look at this in... Actually, that's okay. Let's have a look at the year. And if you track this through, then you will see, look at that bump in 2020, around about October 2020. That's when we started to get a really big bump. But this point here, we can say is the floor really for gold just in December, and then we got the bump at the start of the year in January. Now let's just bring this back. Now this is the interesting bar, I think, here. Look where we are now, and look at the bar that we've got. So this does suggest some downside with the 10-year yield, which will help gold out. But it's in an uptrend, and it would need... I don't know if I can draw a trend line here or not. I suppose I can, probably. How do you draw the trend lines here? There we go. It would need to, this area here at 140. Now, this becomes really interesting. You know, what happens at 140? What is your view on the HSI? Oh, the Hang Seng. Let's come to in a minute, Gerard. I do have a kind of a bit of an opinion on the Hang Seng. It's pretty positive. I mean, I'd say that China are probably still recovering better than most, but I think that there might be a few caveats on that, but I don't have as strong an opinion as I do on something like gold. So let me finish this off first, and then we'll have a look at the Hang Seng, charting and everything else after Jeff's done his breakout. So this bar I think is interesting. It's a shooting star. You know, pretty much it's gonna act similarly to a shooting star. Now this suggests that we could get a little bit of a drift down, but you can see that there is some support here at 140, 141, something like that. So at that point, I want to see what's happening to the 10-year yield, because if it breaks through, then I will hold the gold position. But if it pops, then I'll probably want to start to ease back on the gold position with the potential of picking it up a bit lower at 1500. But I do think that we're probably likely to get a bit of upside considering what we're just seeing here, because this is the thing holding it back. Now, this has also been holding equities back. Now, if we bring in the equity picture as well, then what we did see was now, and you know, in fact, let's just bring that back one more time. Look at the pop here. The pop here was the first week of January. That was the pop. Now, if we bring back what happened with gold, look at this. The first week of January, the pop to the downside. Now, I'm not trying to kind of give you a tenuous correlation here, and I know all we've done is looked at one little piece of data. So go back and have a look at the correlation between gold and the US 10-year, and it will really help you trade gold. It'll find you no problem, buddy. You'll find it a lot more simple to trade gold if you start looking at the 10-year. But the 10-year does suggest anyway. The 10-year is suggesting right now that we could get a pop to the upside with gold. It's suggesting a pop to the downside with the 10-year. So I'm looking for gold for the upside. Probably the same with silver as well. Silver more attractive potentially. And if we look at what happened to the indices, the indices at the same time, we got a pop to the upside, and that daily bar is looking very similar. So the 10-year is affecting this as well. Now, we're having a bit of a negativity so far this morning, but I don't think that's going to hold out. We'd have to watch for that 10-year and see what those bond yields are doing. We are seeing the dollar index pop to the upside, which is probably not too positive for the Nasdaq and gold. But I wonder whether we might get one more flush out to start with, get everybody out of the longs, and then start to move to the upside. So I think the Nasdaq is a potential long. I think gold's a potential long, but it might still be a little bit early. Now, the seasonal bias for gold starts next week. Really, that's when we get a much stronger seasonal bottoming. For gold. So you may enter a bit early, and if you're not comfortable with that, then wait till next week, because that would suggest something that would potentially hold. Now, what I've been looking for is something which could give us a higher low on the hourly, and we did get that. We did get that over the weekend. Sorry, over the end of last week, we got this pop to the upside, giving us a first higher low. Now it's just come back and closed the gap, but it still looks a bit tenuous here, and it wasn't able to break through and hold this trend line. Actually, that's not even the trend line. It's a better one than that. There's your trend line there, just because it goes back a little bit further. So it hasn't been able to hold that position, and I suspect getting back up to 1705 will get a lot of people interested in some further selling with gold. So that's where we might be. You know, we might be sort of flip-flopping around in this area, take some more people out on the longs, and then pop to the upside. So as I say, could be a little bit early. Now, when it comes down to the dollar, we have seen a pretty good move to the upside. Now, this is the dollar index. Now, again, looking at that first kind of higher low scenario, it looks like we are through an area. And if we look at the weekly, could be a little trend line here. And again, it looks like we're through an area. That looks pretty good, doesn't it? When you sort of look at the weekly chart, there's a touch. Looks like that touch might even be a little bit tighter than there. Touch. You look at that on a daily so you can see it properly. And that's a pretty nice pattern that we've broken out from now. So suggestion now that that the dollar is getting a spring to the upside, and this won't help things like gold, and it probably won't help the indices either. So so this needs to level off, but it is just about a level of resistance here. So I think some easing to the upside with everything against the dollar. I think that the dollar could ease to the downside, but we need to watch out. We need to watch out down here, and we need to watch that 140 level on the 10-year. Still waiting for 1680. Good move, mate. Now it got close, didn't it, Lewis, to 1680? If not, touched it. Well, let me just bring that back. 1687. Yeah, I think that's good discipline, mate. I think that's really good discipline, because you've been calling that level, and I think when it comes down to it, if that's where your analysis says, then sticking to it is just such a strong, it's a very noteworthy thing to do, and also it will just help you with your strategy kind of later down the line as well. So yeah,
it certainly helps with your mindset, and it also helps with your bank balance at the end of the day, because you're the one responsible for it, and I'm 100% behind that. 100%.
Yeah, I think that's right, and 1680 looks good, and the thing about 1680 as well is that it probably will flush a lot of people out. It'll probably flush a few more people out down here. Anybody that's gone long at this point with a stop at the lows will probably flush those people out at the 1680 level, and then maybe a turnaround in gold, and then possibly a dead cat bounce. But we need to see what happens with that. Now, quickly on the Hang Seng. So the US will probably drive the rest of the market. Globally, it'll probably drive what else is going on in the market. So let's have a quick look at the Hang Seng. And then I want to finish with Bitcoin, and then I want to pass to Jeff for the pound again. So where are you, Hang Seng? Here we go.
Hi Paresh, hi SF, hi LT. How are we doing?
So certainly negative when it comes down to the technicals, and a drag to the downside is on here. So let's have a look at where this could come to. I would be bullish on the Hang Seng, not here, but I'd want to buy this, and this looks to me like a buying opportunity. This doesn't look to me, and what you've always got to ask yourself is the move to the downside a change of direction, i.e., does it suggest bearish price action coming into the next period, or is it a buy the dip opportunity? And this looks to me like a buy the dip opportunity, but where is the question? So I would have thought down around about 14,500. 14,500 looks around about right. We'll do the fib as well. Okay, the fib drags us up here, which we can see. It's a monthly chart, so that gets us to 15,200 for a buying opportunity with the Hang Seng. Now let's just have a look at this. That level there would suggest around about, that's towards the end of the year. Yeah, it might be a who knows? This is a monthly chart, so there is a primary trend line along here, which would suggest that this area might not get seen for a little while yet. So we might see some further downside, but I would be bullish the Hang Seng, but on a longer term basis rather than on the shorter term. It's through some pretty important levels here, isn't it? And because of the US 10-year, the valuations have just been exposed in the US. Some of those growth valuations are being exposed in the US. So some further downside in equities, I think, is probably quite likely. And the Hang Seng may well kind of be dragged down with the US market. A quick look on the VIX would also suggest that we might be seeing a bottoming out on the VIX as well, which does suggest some volatility coming into play with the US stocks, with the S&P 500, and that's going to have a knock-on effect, as I say. So I think for right now, Paresh, if you're short, I would stay short. Sorry, Jira, wasn't it? If you're short, then I would stay short. But if you are looking to go long, then I would be with you. But it does look early. It looks like you could be quite a bit early as well. So I think let this play out. Have a look at those 10-year bond yields. See if the US starts to turn around. If that is to happen, then I think we can start going into the Hang Seng, because all markets seem to be coming down a little bit today as well. Now, finally, I want to finish with Bitcoin. I mean, I've been thinking about Bitcoin a lot because I would love to get into Bitcoin on the long side.
Nightmares, mate.
I've been having nightmares
Yeah,
about Bitcoin, you mean?
yeah. Well, you said you've been thinking about it. So I immediately just go into, I don't know, comic mode and think, okay, what's the funniest thing I can say here? And, and I
Well, to
got
be
it wrong
honest,
completely.
well, do you know what? I mean, only because uh, I I would be having. Do you know what? If I was in this, mate, I would be having nightmares. I think because do you know what it is with Bitcoin? And this is why I'm thinking about it really quite deeply. Is that I
That was
really
my
want to
point.
buy. Well, it is leading me to distraction, I have to say, because I want to get in, and I've got a friend who's in, and he tells me pretty much on a weekly basis to buy Bitcoin, and I keep saying to him,
See, I
nah,
told you, I told you, I told you.
yeah, and it
Yeah.
pops up over the weekend. I see it going to 52. I'm like, oh, I'm going to miss this run, and then I come back to I suppose some sort of grounding point, and I think to myself, that's just not the way I do things. And I've got to accept that I might miss this one because everything tells me this is coming back. This is coming back to a better price. 38K, Lewis, is where I'm thinking as well. 40K, fine, I don't mind sort of in that area. But everything is telling me this is coming back. And the thing is, if I buy it and it comes back, then I will feel worse than if I don't buy it and it pops up because where is it going to go to if it pops up? Probably, okay, let's say 100,000 to be sort of give the Bitcoin bulls their dues, and that's what they're saying. It's going to go to 100,000. That means it's going to double in price. The truth is, there are many things that are going to double in price by now and December. So, do I really need to be involved in Bitcoin?
You're talking 1-to-1, right? That's
Yes.
it.
Yes.
To go to
Yeah.
100,000, that's a massive punt
Yes.
for
Yes.
not much reward, in my opinion. Anyway,
exactly, mate. That's the point, isn't it? It's just that the reward just doesn't match the risk, in my opinion. And this is what I'm talking about here. In fact, let me bring in a the indicator that I like the most for this stuff. And it's just the RSI. I know that there are others that will give you the same kind of thing, but I've got an RSI here, and I'm not worried about this. Okay, this is overbought, and this is on a weekly. This is the one that concerns me. This is a monthly RSI, and it is just embedded to the upside here. Now, it does happen, but look what happened last time it got embedded. From this high here. Now, that doesn't look like a big move anymore, but I can tell you at the time, for the people that were holding it up here, it was a very, very stressful move. That went from 20,000 all the way down to 3. So I don't know what that would be in percentage terms. 20,000 all the way down to 3, but it is.
I don't know, but it wouldn't want to be in the middle of COVID because there was no toilet paper available at that
time. Exactly. So you got that going on, mate, and everything's relative, isn't it? Everything is relative. So if you think of like 20,000 down to 3 in relative terms is a big drop. So this is what makes me concerned about it. I just don't have the confidence to be buying it here. And yes, I want it. I really do want it in my portfolio, but I just can't justify it. So I'm having to sit this one out. So so my thought was back to the way I've been thinking about it. My thought was, I don't buy things when they're overbought. It's just not my game to buy things when they're overbought, unless I want to get in and out. I don't mind sort of on a monthly chart when it's overbought, no problem. On a daily or a 4-hourly or an hourly or even less, fine. But if I want to buy something to hold on to, how can I justify buying Bitcoin when it's overbought on the most significant time frame that I have? Which is the monthly chart. So I'm having to sit out with this one, mate. But I do still find Bitcoin just a really good topic of conversation because it is.
Look, the whole world's talking about it now, right?
Yeah.
And we knew this day would come. We've been talking about it for years. We knew this day would come. Now,
yes.
How to take advantage of that? Obviously, buy it at $50 or whatever, and you'd be laughing your head. In fact, you'd be probably not trading anymore. But the reality is, exactly as you say, you're taking a massive risk to buy it right now, in my opinion.
Yeah.
Because it's so volatile. you know, a 30% dump is what Shukri sees as par for the course, right?
Yeah.
Are you able to maintain that and stay out of the toilet? You know,
Well, do
I'm
you know
not.
the other thing is,
It's
mate?
not a game I
The other,
play. It's simple.
the other thing that I keep coming back to is that I just don't think. Now, I might be wrong on this because other people have got a view on it, but my view is
Of
that if
course.
I if
Yes.
I
Sorry.
buy it here, then I would feel like I wasn't being very professional because of my view. You know, if because I have this view on it, because I have this view on Bitcoin coming back, I have this view on it being overbought. I just don't feel like then I would be being very professional if I just went, oh, do you know what? I just don't want to miss it, so let's get in. It's too overbought to say that. I will say that at some points, you know, if I believe in something really, you know, really quite deeply. But when the indicators are saying what they're telling me here, it's just suggesting just ignore it for right now. You know, if you miss it, you miss it, and you're just gonna have to take it. The other thing is that the other reason I think I'd be being unprofessional is that if this is overbought here and it was to do, oh, I don't know if I can make the charts do what I need it to do here. No, I don't think I can. Well, let's say it's overbought here. Where's my pen gone? There it is. If it is overbought here, so I'm going to say that this is the Bitcoin chart over here. This is the same in the way that of price action, and it's done this. Whoop, it came down, it went up, and it's going down. Now it's this thing here. So I'm trying to. What I'm saying is this here is the same as this here. So if this is overbought here, and it's overbought over here, this is also likely to happen. Whoop. So if I don't get it down here, or wherever it'll be, then I'll probably still get this price at some point anyway. So I don't need to really worry about the first run to the upside if I miss it, because it's probably coming back to at least here again. It's at least 50,000 seems to be a fairly well contested area. So it's probably coming back to 50,000 at some point anyway. And if I am looking at this as a lot on a long-term basis, then I don't really mind. You know, if it does pop to the upside. That's the other thing. So these are the thoughts going through my head anyway, mate. LT, would I buy
it's the classic thing, isn't it? It's FOMO versus FOLO.
Yes.
And my assertion is, if you want to trade Bitcoin, trade it. I've got no problems with what you want to do. It's, you know, horses for courses, whatever floats your boat. But to my mind, there are, I don't know how many thousand other asset classes you could be buying or selling right now that will not be anywhere near as volatile and far more predictable, in my humble opinion, than is Bitcoin.
Agreed, mate. And do you know what's interesting about that link you've just sent? I think you could probably make the argument for gold doubling at least. And if we're talking about Bitcoin going to 100,000, we're talking about gold, you know, sitting around about the 3,400 level. I think that's possible, and even more possible than even that. In my opinion, is silver doubling in price, and because the demand for silver is you know it's very much there. Oh, I've got nothing on my chart there. Let me just change this back. The demand for silver is very much there when we think of where we're going. But the other thing is, silver has been at. Oh, this is useless.
Hang on, I'll just close my eyes and turn my hearing off while you talk about silver, right?
Silver has been. This is useless because this doesn't go back far enough. But I can tell you.
Look at the prick of a thing go down
now. I can tell you that silver back in 2011 has been at 48. So we're currently down at 25. So this thing could double in price as well, and it's been there. So it's already proved that price can be seen. So you know we're talking about, and that's just one other thing that could double in price. We're talking about Bitcoin going there. I think gold could go there, and I think silver could go there as well. So I'm much more interested in that at this particular stage. The bulls are comparing Bitcoin market to the gold cap. Yeah, that's interesting. I think. Oh, would I buy it with leverage? Would I buy Bitcoin with leverage? No, I probably wouldn't buy it with leverage. No. 1 to 50K. Yes. That is true, that it is 1 to 50K. However, Now, what is somebody else will be much more informed than me. What's a small Bitcoin? What's a percentage of a Bitcoin called? Is it called like a what's it
I don't
called?
know.
Oh gosh, they call it it's like the Bitcoin is the dollar and it's the equivalent to a cent. What the dollar would have as a cent. Is it called a Yatoshi or something?
I'm buggered if I know. You got me.
Okay, well, I don't know what it's called, but you can buy these. You can buy a small chunk of a Bitcoin. You don't have to buy a whole Bitcoin, right? You can buy a Yatoshi or whatever they're called. That's probably completely wrong.
Isn't that generous of them? Thank you.
Because there's no way they could push the price up, and if that was the case, if you had to have 50,000, so you can buy a small percentage. So I will be buying it in without leverage. I don't particularly like the leverage story, if I'm honest. It's different if you're trading it, but I don't know if I would trade Bitcoin. I probably would want to buy it and hold on to it. There are claims that many large companies are owning Bitcoin. The thing is, most are contractual, meaning there will be a date that the sell-off happens. Yeah, that's a really good point. Crash possibly happening at 20K before the huge rally, and contract will race it above 100,000. Yeah, and do you know what I think is really interesting? There was also a report over the weekend about the energy that Bitcoin uses. The energy that these companies are using to create a Bitcoin. And the headline was, could climate change be the death of Bitcoin? And after reading it, I thought, actually, morally, I'm not sure whether I should be buying Bitcoin, but it's only one story, and I haven't read a counter argument to it yet, and I will go and find some counter arguments to it. But that could be something which could be quite interesting. But then you think, well, if the energy that Bitcoin uses to create itself is really, really high, then it's unlikely to be the death of Bitcoin. I would have thought that would be have the adverse effect and actually be even more positive for Bitcoin, because at some point either companies won't be able to afford to farm it, or they'll be shut down. So I think Bitcoin becomes even more rare potentially. I left the chart all the way to the end of the window, making it troublesome, so won't see it as often. I see. So in my gold and silver will not move until Bitcoin ADA come back down. Yeah, I'm not sure about that, Lewis. I don't think that they are linked. I don't think that the cryptocurrencies really have. Well, actually, that's wrong, isn't it? Because we have been talking about people buying cryptos instead of precious metals. So yeah, okay, mate. I'm gonna go with your theory on that. Not with any great conviction, but I will certainly hear a theory on that. I still think that we are talking about inflation when it comes down to gold. I still think we're talking about inflation, and I still think we're talking about this 10-year. And if the 10-year does ease back and the dollar eases back, I think that we could start to see a proper move with the likes of gold and silver. So that's just
10-year rallied and came off, didn't it? I think I read something about that.
What, the 10-year?
Yeah.
A little bit. I mean, it's not come off sufficiently. This is the 10-year here, mate. This is the 10-year. This is on a daily chart. So this was Friday's bar.
Okay, so it hit the high and came off it. Simple as that.
Yeah. It's hit a high. Yeah, for sure. If we look at this on a 2-year, then you can kind of see where we are. Let's draw another line over here. Actually, I wonder if I can draw. Oh, there's a trend line there. That's quite good. Let's draw this level here. Oops, get rid of that. I think I can do it.
Yeah, that's true. Crystal, they did get busted. I think I heard Shukri talking about that. Stealing electricity. My God, who does that?
Who's that? Who did that?
The Malaysians.
Oh, right.
Yeah,
look at this, mate.
He's not in. He might be behind bars, is he?
He might be. Yeah, look at this level here, mate. Look at this level here. Now, this is back in 2019. It was a bounce. It was a bounce there again. It came down. Now, we haven't really had a proper test of it until now. This was 2 weeks ago. And the high here is at 1.46. And this is 1 week ago. Sorry, this is it this week? Can't be this week, is it? I think this might be the. Oh, sorry. These are still. No, this is this week. Yeah, this is this week. I think. Yes. The dates are a bit strange here. That says the 1st of the 3rd, which would have been last week. I don't know why we haven't got a new bar, which is what's confusing me here. But you can see, but the line is the most important thing. This is the level here at 146. Now, if I change this back to a 1 year, yeah, so we did break above that. We did close above that. So that would suggest that we come down to at least 146, 147 for a test. And this was Friday's bar. So I don't know, mate. I think we could drift to the downside with a 10-year. But as I say, really just back to, I think maybe the 10-year and inflation are the stories that I'm following with gold. Not really so concerned with what happens to the Bitcoin, ADA, and Ethereum market personally.
Yeah, look, we've got a professional in our midst that's doing all of that for us. I reckon the best course of action, and I want to be involved in cryptocurrencies. I do, because I think there's something there. I've got no doubt about that, and we've spoken about that for a long, long time. But I have to learn a whole new way to trade, a whole new way to think about investing, and I just haven't got the time to do that. I'm sorry.
Oh, mate, I get it. Yeah.
So I thank God. no, probably curse God sometimes for Shukri, but thank God he's around, because we can rely on him to show us the way, and that's the involvement that I want to have in cryptos. I want to leave it up to an expert. I don't want to learn about it. And yes,
I get it.
It may well be the future, and I need probably to understand the way to get in and out of the market, revolving around that. But nothing changes, guys. If that does become the way of the future, then guess what? It'll be guided by what happened in the past. So that's that's what technical trading is all about.
Jira's asking about is Bitcoin the new gold, or is it or the new tulip? Interesting. Do you know, mate? I don't think anything is really ever going to be the new gold, but I do think that we can't ignore Bitcoin. I think gold will stay around, is my point. I don't think Bitcoin will replace it. I think Bitcoin is its own thing, but it needs to be there, because that age is now upon us. Did you know the Kings of Leon, Jeff? Heard of the Kings of Leon?
No, I haven't.
Oh, okay. We should have. I wish we had the US show so I could play a piece of their music. One of the biggest bands in the States, of the last, I'd say, 15, 20 years.
Okay.
But Kings Leon, really, really, really big band. Have a look, but check them out. Maybe I'll send you a link to one of their better songs, because there's a few, as every band does, they write some brilliant ones and some that aren't so brilliant. But so I'll send you a link. But they are.
Yeah, please do.
They're very, very, really popular. Really, they were really sort of like hip when they first kind of arrived. They, over the weekend, were the first band to release. I think another band has done it, but not in quite this way. That they released all their artwork and their album as a token. So they're the first band to do the NFT, the non-fungible token, and I think they were selling it for $50. And I don't know if you understood how these things work, but ultimately you print a certain amount and you don't print any more. So if you print, like, let's say you're the Kings of Leon and you say we're going to sell 10,000 copies of this at $50, yep. When they get sold, and then somebody else will come in and say, I will pay you $100 for that album. Somebody could sell it on, and if they sell it on, Kings of Leon get a kickback on the sale every time it sells up.
Oh, now, nice. I like that.
Yeah, I think it's a brilliant way to do things, because music has been really, I think, probably oozing blood ever since the death of vinyl.
Absolutely.
Because vinyl was one way to protect an artist's property, really, because they had artwork on there, they had lyrics on there, and it was a kind of like a plastic thing that you couldn't go and reproduce. As soon as CD came along and you could reproduce it, put it into your computer, take the music off and put it onto another CD, it was all over, really. That was the start of the end. So this might well now bring it back, because these non-fungible tokens are going to kind of make it so music and artists are protected again. So
you know, I'm having mine created, don't you?
I do. Yeah. So you know all about these things. So
well, no, just Shukri told me to do it. I've got no freaking idea.
But you know, mate, this is where we are here. You know, if one of the biggest bands in the world have now stepped into that realm, we have already arrived. You know, we are. It's not the future anymore. The crypto space is the current. So we do need to kind of get on board with it. I think better than the Beatles. No way could they be better than the Beatles, and I'll tell you for many reasons. Firstly, time. They haven't been around anywhere near as long. Secondly, the diversification of their music. You know, the Beatles just changed. They changed the face of musical history. So no, they can't be better than the Beatles. Very few bands would be able to be hailed as better than the Beatles, in my opinion.
Yeah, and drugs are completely different these days. That's the other reason.
Yeah. Now let's get to this pound trade, mate, before we wrap it up.
Oh, okay. Let's do that. It's also looking very sick at the moment, which is why, of course, we're telling you guys not to trade this with any reasonable amount of money on it, because we just haven't proven it yet. Simple as that.
Yeah.
So here's okay. The reason behind the trade is, and this is nothing new. This has been around for 100 years. But those of you who don't know why and what we're trying to achieve, this is an explanation for you. So it is an OCO, and those of you who don't know what an OCO is, it means that one trade cancels the other. So we're placing a buy order and a sell order at the same time, and we're trading the previous or the 3 bars previous in this version of it, or this morph of it. We're trading the 3 bars prior to London Open.
Not 3 bras.
No, but they'll be probably currency in the next 10 years.
That'll be the next career.
Well, they have been for many years. Oh, sorry, that's probably sexist. I'll get in trouble for that. 1, 2, 3.
Watch this back, mate.
Sorry, my apologies to all the the ladies in the room. Oh dear.
It's like a Carry On movie, all of a sudden. Yeah.
Okay, so 1, 2, 3. Now, there is a version of this that we have been trading for the last couple of weeks that has been failing dismally, I've got to say, that trades the last 5 1-hour bars prior to London Open. It's all about gaining momentum out of the London Open session, right? As soon as London opens, and historically that's been the case, and that's why we're looking for this to become a system or a trading strategy. And we have to get it right before we say to you guys, okay, now it's time to trade at 1% or 0.5% or whatever the case may be. But whilst we're doing this, you need to take into consideration that it's totally unproven, and we have to get it right before we release it and say, okay, it's now a system that we're prepared to back. And it's not right now. So what we're trying to do is get a strong movement at London Open, which historically has been the case, as I say. What we're doing at the moment, those last 3 bars prior to the Open, we're trading above that as the breakout area, or we're trading below that as the breakout area. Now, my way to do that, the way I always trade, is to take an early profit so that I can get safe in the market. That's what old people do. They don't want to lose. So it's a FOLO system, not a FOMO system. Don't want to lose. We want to be as comfortable in the market as quick as we possibly can be, so we take profit. And the parameter that I've used for that is half of the risk. Now, the risk today was buying. We had a 38, 39, 30 pip of risk. So we take 15 pips, and that becomes our TP1. At that time, if we hit TP1, we move out, we take half off the table. So we bank half and move our stop loss 15 pips below our entry, which means no matter what happens next, the worst result can be a break-even trade. If it does go with our breakout direction, then we can pick up some money up here or wherever the case may be. When we hit TP2, which is double our risk, we've got a choice. What we must do at that point is move our stop loss to entry, which means that we must win no matter what. We can also take more of our stake off the table, so bank some more money if you want to do that, or you can just let it rip. And the way we then go is we trade 2 1-hour bars. So what that means is if we get 2 buyer bars, say we entered the market here, as soon as we get 2 buyer bars, we move our stop loss under those 2 buyer bars, and then we get another one. So we move our stop loss under those 2 buyer bars, then we get another one, move our stop loss under those 2 buyer bars until we get taken out, which is the way that we've chosen to trial this. At the moment, looks like we're going to get taken out on this, and that's just the way she rattles, right? That's why at the moment, as I say, it's in test mode. We suggest that you don't trade it with any meaningful money on the table, micro lots at best, and until we prove that over time we can make this a winning strategy, then that's what we intend to do. So I hope that answers the question. If not, then we'll go into it again tomorrow and make sure that you're okay with it.
Fantastic stuff, mate.
Mate, how's the toddler? Gone to school?
Well, it's quiet all down here. It sounds all quiet down.
Sounds okay.
Yeah.
All right. I'm going to update a couple of trades. Pound Kiwi, it does look to be on its way now, guys. That said, anything can happen at any time. We flagged that we were looking for this months and months and months ago, and finally it did set up for us. Not on the, well, it did on the monthly chart actually, and we flagged this as well. That tweezer bottom sitting there, I said at the time there would be worse trades to take than buying above that, putting your stop loss under here. We chose to wait, and we waited until we got a setup on the daily chart, which we did, and we got a false break of that little intraday trade line sitting there. We traded it above the open of the bar rather than above the high of the bar, and we've since taken our first profit, and we are now trading that for free. All we got to do is, as Shukri says, hodl here and hope that we don't suffer a major pullback. I've got the feeling that won't be the case, but you know, anything can happen at any time, of course. I'm going to keep my stop loss here. I'm still in the free trade position at the moment, but that may, and it'll probably remain that until the end of the month. So there's a long way to go here. If we come back and hit it, then obviously, to my mind, it's going in the opposite direction. But this is based pretty much on a lot of things, that big channel being one of them. And we're chasing a lot of pips here. We're chasing 2,500 pips here. So we're going to be in this for a long, long time. What we based this entry on was, well, you can call it a double bottom, you call it inverted head and shoulders, call it what you want, but the neckline broke and was retested and then got smashed again. And on the pullback, that's where we wanted to get in. That's where we are in. And I've got high hopes for this trade. As I said, we've been in it before, and I'm quite comfortable with it. One I did want to mention was dollar CAD. Now, dollar CAD, we had this set, I think, 4 trading days last week. And it was based on, again, this false break of support here. There was a big flush out here, in my humble opinion. Those 2 big bars there were telling me that the next move was going to be in this direction, or the next major move was going to be in this direction. So we wanted to take advantage of that. I kept this trade on all the week. I replaced it again on Friday morning. Nearly got taken in. I don't know actually how I didn't get taken in, but eventually I didn't get taken in, and that trade expired. It's now a setup. Let me get rid of that trade line. It's now a setup, genuine slingshot setup as a high test bar here. The problem I've got now is entering there when, you know, we could have got in down here is problematic. But I still believe that if price does come above this level, the monthly pivot, it will eventually accelerate and get longer. I just want to wait until we've got a better entry, but I'm not sure where that's coming from at the moment. Maybe it's a break of support, but I want to see that monthly pivot go. So I'm still waiting on that one. Euro pound, we decided on that before. It's probably a short to get long. Euro Kiwi may well be the same, maybe a short to get long. Just not ready to get into the market on that one. Pound Aussie, very keen on this one because of what I see in front of me. Very, very similar to Pound Kiwi, but even better, I reckon, because we're not even back into that range yet. So I see this area here as a big retest around about 191 mark, and we're a long, long way from there right now. If we can find a way in on this, we're about 800 pips away from there right now. If we can find a way in on this on the daily chart, and again, it's a nice little slingshot setup where we pull back away from there. Bad price to get in, but if we broke here and retested, then I'd get very interested. You can see the structure that I've got here. We've got a triple bottom, higher high, higher low, another higher high, another higher low. I reckon this is ready to go. And profit area is up here, of course. And Euro Aussie is exactly the same. Again, I've got a beautiful trend line sitting through here. I've got a nice little slingshot, shots over the bow here, shots over the bow here, shots over the bow here, even considering an entry there. But I'm again going to wait on that and look for a better entry throughout the week. Imposing, these two bars here, very, very imposing. And I'll be looking for, as I said from the outset, euro strength throughout the week, but maybe we've got to wait just a little bit for the euro to retrace before it goes in the northerly direction. I've got no fundamental reason for that, Ash. Maybe you can help me out there.
Sorry, mate. I was just replying to a message from Paul.
Okay, sorry.
Yeah.
No, I was talking about being bullish the euro, not necessarily against the dollar. In fact, probably not against the dollar. Yeah. But against the Aussie, against the pound.
Well, I mean, I do think the Aussies probably got the strongest signal to be negative in the coming week. So I could concur with that. I don't really like the euro that much. It's quite, a bounce in the euro would be, I think, just because it's come a long way. And it's leveling off a bit. It's not hugely negative. I think the Aussie is kind of showing some pretty bearish signs when it comes down to the cotton, the seasonals, and also the fundamentals have leveled off a little bit for Australia. So for that reason, I would think that some of these currencies could have a bounce against it. But I don't think it would last that long, because I think ultimately the Australian economy is probably in the best shape. But I think
agreed.
I think the move has probably done its, this particular phase has probably done its thing. So I think you're right. I think a bounce with, against the Aussie around in these areas is probably the right play, but not a turnaround, because I don't see that, particularly Europe has got particularly strong fundamentals. It's just probably now priced in. Where they both are is probably just about priced in.
Yeah, I can't help but think we're going to get a bounce off here, but
I think you're right. I think I'd make you right on that. No more homeschooling, Lewis. No, thankfully.
Till the next shutdown.
Exactly. Hopefully it won't happen. I'm getting a message from Paul, mate, because I'm actually due for a meeting with him, if that's okay.
Yeah, look, we're done, mate, anyway.
Okay.
And speaking about done, we're nearly done on the pound, but we're not out, so we'll see how that goes. And that's pretty much my watch list for the week. So we'll see how we're looking this time tomorrow. Maybe there's some better setups than we've got at the moment.
Fantastic.
So we will say thanks, mate, and see you tomorrow.
Yeah, see you tomorrow, guys. Shukri in tomorrow, right?
Shukri's in tomorrow, talking about that magic word, cryptocurrencies. Thanks for your company, guys. We'll see you then. Bye.